Welcome to The Explainer. Today, we're going to break down a trading strategy that cuts right through all the noise by focusing on one single, powerful signal, the first candle strategy. Okay, let's get right into a problem that, let's be honest, every single trader has felt: analysis paralysis. You know the feeling. You're staring at a chart, it's just a mess of indicators, they're all screaming different things at you, and you're just stuck, frozen. The first candle strategy, well, it's basically the antidote to that. It just tosses out all that complexity and hones in on one key piece of information to give you a clear, simple, actionable plan. And making that shift, from total chaos to real clarity, it's not just some new tactic. It's a whole philosophy. The whole idea here is built on something that feels a little counterintuitive. The source material argues that most traders fail not because they know too little, but because they know too much. They just overcomplicate everything. This strategy is all about stripping away everything that's not essential, working from the belief that simplicity is actually the straightest line to profitability. So instead of trying to predict the market with a dozen different tools, this whole system is focused on the story that's being told by the very first 5-minute candle of the New York Stock Exchange Open. The theory is that this one single candle, it captures that initial intense battle between the buyers and the sellers, that first flood of institutional money, and it gives you all the clues you need to navigate the rest of the day. So how does a philosophy like that actually become a trading plan? Well, it translates into a really simple, almost mechanical 3-step system. And it's designed specifically to take all the guesswork and, frankly, the emotion completely out of the equation. All right, here's exactly how it works. Step 1, 9:30 a.m. Eastern, that first 5-minute candle closes. You just mark its high and its low. That's it. That's your battlefield for the day. Step 2, you drill down to a 1-minute chart, and you just wait. You're waiting for the price to break out of that range, and then crucially to pull back and retest it. And third, and this is probably the most important part, you don't jump in yet, you wait. You wait for a strong confirmation candle that basically proves one side has won that retest. And this step right here, it's all about discipline. So many traders get absolutely burned by jumping the gun on a retest. This strategy forces you to wait for proof. You have to see a strong confirmation candle, one with a powerful close or a big rejection wick, showing that one side has decisively won the battle at that level before you even think about risking a single dollar. Now, once you've really got the hang of this basic setup, there's a little enhancement you can add on top. It helps you pinpoint even higher probability entries. You know when price just shoots up really aggressively? Sometimes it leaves behind what traders call a bullish gap. You can think of it like an air pocket in the chart. This little zone of imbalance often acts like a magnet for price on a pullback, creating a really strong support area and giving you an extra layer of confidence for your entry. And as you can probably guess, the exact same thing is true in reverse. A sudden, sharp drop creates a bearish gap. Now that zone acts like a ceiling. So when the price tries to rally back up to retest that area, sellers are often just waiting there to get back in, which makes it a really high probability spot to look for a short entry. So when you put all these pieces together, you get this really powerful confluence. The 5-minute range, that gives you the overall direction. The 1-minute retest gives you the timing. And then that gap, that gives you a super specific, almost sniper-like zone to look for your entry signal. Each piece filters the setup, and what you're left with is a very high probability entry model. Now, this all sounds great in theory, but the source material doesn't just leave it at that. It actually puts the system to the test to see how it performs, under live fire. This is the bottom line question, right? Does this simple rules-based system actually work? Well, the source material lays out the data from an 8-day test to answer just that. So here are the results from that 8-day test. As you can see, 7 wins and just 1 loss. Now take a look at the risk multiple column. Here, R just stands for whatever your initial risk was. This means that for every dollar risked, the wins were targeting at least $2 in profit. That's the 2R. Meanwhile, that single loss was just $1 risked. This is so key for long-term profitability, and it's included for total transparency because, hey, no system is ever perfect. So that performance over the test period translates to an 87.5% win rate. Now, sure, it's a small sample size, but it really does demonstrate the potential consistency of a system like this. And this chart just gives you a really clean visual of that performance. The overwhelming majority of trades during the test were winners, which really speaks to the power of just waiting for a clear, simple signal before you decide to enter the market. So the big takeaway here isn't some guarantee of future profits. It's a demonstration of a principle, that a simple mechanical process can be your best filter against all the market noise. It helps take emotion and hesitation out of your trading, and that can lead to much more consistent decision-making. And that really leaves us with one final, pretty provocative thought. In a world with infinite indicators and endless analysis, could it be that the most powerful signal is actually the one that shows up right at the start of every single day?